Hey, it's Richard Geller. Boy, do I have news right now. I'm so excited. We just got a report from the bill that President Obama is putting forth, and this is straight from Bloomberg. I want to just give you the quick synopsis of it. He wants to get $275 billion to a program for loan mods, basically to cut mortgage payments. Principal reductions are not on the table because basically they say that they can't afford it. It would be a prohibitively expensive proposition, said a Washington-based mortgage industry analyst. This is what I told you yesterday or the day before. They are not going to do principal reductions on a wholesale basis. What they are doing is this. First of all, they're going to be buying preferred stock in Fannie Mae and Freddie Mac. Basically means they're going to be funding Fannie and Freddie, which Fannie and Freddie are a bottomless pit, and they need this money just to stay afloat. So that's really not going to do a whole lot. The basic program is they're going to do loan mods. They're going to modify people's interest rates, lengthen the time they have to pay their loans back. They're going to try to get lenders to do loan mods, and they're going to help by lowering the payments to 31 to 38% of the borrower's income. And then the government will pay the payment share so that it brings the cost to 31%. So basically the government's going to be paying lenders to do loan mods. They're going to be paying them a little bit every month. And this is great news. They're going to be paying them, the servicer is going to be getting like a grand according to this report. I think it says a grand here. And yeah, and as much as $1,000 for 3 years when the borrower stays current. And homeowners are eligible for $1,000 annually for 5 years, remaining current on their plan. Very interesting. Mortgage services will get $500, loan holders $1,500 to modify agreements as an incentive for the industry to seek out borrowers at risk of falling behind on their payments. So it's fantastic news because this means there's more and more money in this thing. Loan mods are becoming institutionalized right now, kind of like, you know, doing your taxes. And that is fantastic news. So this is exactly what we expected. There's one more thing. I told you what happened, exactly what's happening. They are also going to propose that bankruptcy judges under Chapter 13 can do a cram down, that they can reduce the principal balance. That is exactly what I said that they're going to do. They're going to let judges reduce mortgages on primary residences to fair market value as long as the borrowers stay current on their plan. This is really a horrendous thing for people because it means it's going to force people who want to stay in their home and who need a principal reduction into Chapter 13. And Chapter 13s are just another disaster area. I won't get into that on this video. We'll talk about it some other time. But I do want you to know, incredible news on the loan mod front. We just had an advanced loan mod course last night, which just was gangbusters. We had hundreds of people on the call, and just an incredible call. And I'm going to be making that available to people that are in the Free and Clear Club and people who have purchased our program. And if you're in the loan mod business right now, I think it's going to get better and better. Richard Geller, we'll talk to you soon. Thank you.